Hello, everybody, and welcome to another episode of my weekly portfolio performance update. We are at week 16 now, which is April 14th through April 17th, and I am getting this video shot a little earlier, actually a lot earlier, and that's because today is Friday, Good Friday, and the markets are closed, so that gives me the opportunity to go ahead and shoot this video early and get it out early. Hopefully we'll get it out today. But if this is your first time to my channel, my name is Andrew and I'm an options trader, and this channel is where I pull back the curtain to show you exactly what I do and exactly how I do it. I post these videos each week, typically on Mondays, to analyze the previous week, but again, today is a holiday, so the markets are closed, getting it out a little early. And I also post videos with general knowledge about the type of information about options trading, as well as step-by-step guides on how to execute these trades. So if you are interested in following me on my trading journey, be sure to like, subscribe, and hit that notification bell. Just a quick disclaimer here, as you can see on the screen, I'm not a financial advisor, and the information on this channel is for informational or educational purposes only and should not be considered financial advice. If you are thinking about placing any trades, then definitely consult a financial advisor before so. All right, well, this week I've got some pretty interesting trades to cover with you. I have one trade that has been open for 4 months. It's a trade that I've been rolling, 5 months. I've had this trade open and rolling it for 5 months. At one point, it was a huge loser, but it ended up being a winner. So I'll show you that one later on in this video. But before we get into all of this, just to explain why I'm doing this, number one, if you're new to options trading, this is a channel where you can see real results from a real trader. I'm totally transparent with my trades. Each week I'm showing you what I'm trading, how much I'm making or how much I'm losing. And if you saw last week's video, you saw that I took a huge loss, and I was totally transparent with that loss. I want people to see that this is a viable way to make consistent money, but at the same time, there is no foolproof way to make money without incurring losses. And what really matters is the amount of profit that you're able to generate over the long haul, the long run. And that's what I'm here to show you. Unfortunately, I only just started this channel back at the beginning of this year. And when we talk about options trading, one of the common terms that you may hear is a black swan event. A black swan event is considered to only happen like maybe once every 10 years or so. The last black swan event that we had was COVID. And what a black swan event is when the market has a huge sell-off or a huge event that options traders don't predict or don't anticipate. And the way options traders make money is by the relatively small swings in the market, because part of the frustration with being a long-term trader is that you can buy a stock today, and even though that stock has huge potential to go up over the long run, it may dip down and you might be in a loss position for 6 months, a year, a couple of years. Whereas with options trading, you can still make money even though the position isn't quite going in the direction you expected it to go. But where we can have huge losses is when the market makes huge moves. What we're doing is we're placing bets based on statistical probabilities. So when the market moves greatly outside of what the statistical probabilities are, that's when we take losses. But that happens fairly rarely. So the rest of the time we're able to make consistent income. However, you're going to have to be prepared for that black swan event where you take losses. That's what has happened to me over the last couple of weeks. Hopefully things have settled out, but anyway, that's a little bit of a tangent. I'm talking about why I've made this channel. And again, the reason number one is so that you can see that this is a viable way to make money over the long haul. And the second is to build a community. If you're an options trader and there's a type of option strategy that you like, or if you have any feedback on the information that I'm presenting, I'd love to hear from you. And if you're a new options trader, it's a good place to ask questions and get some dialogue going. So I want to build a community around options trading. So with that said, let's go ahead and get into this week's update. And so what to expect is I'm going to go through each strategy that I traded last week, or this week in this case, talk about the goal for that strategy. I will show you how much I made or lost for that strategy and do a little bit of a performance analysis behind it. I will then go and show you my overall performance for the week. Did I make money? Did I lose money overall with all of my trades? And then I'll compare this week to all of the weeks previous. We're in week 16 right now, so I'll compare week 16 results to every week up until week 16, 1 through 15. And then I'll do any analysis insights that I have gained from this week's trading performance. So just one last mention that I wanted to, one last thing I wanted to mention before we get into this week's performance. If you are new to options trading, I do have a video on the channel that I highly recommend that you watch. It's called Demystifying Options, and this will give you some of the basic concepts when it comes to options trading, so that when I get into these the analysis that I do every week, you'll have a little bit of a knowledge and understanding of some of the concepts that I'm talking about. Otherwise, you're probably going to be lost. So if that's something that you think would help you, definitely go back and watch that one. All right, so now I've switched over to my trading tracking platform, which is called TraderSync. If you are just starting with options trading, one of the things that I highly recommend is that you track your trades. That's one of the biggest mistakes that I made when I first got into trading. I kind of like took it, I don't know, baby step by baby step. And one of the baby steps that I didn't include was tracking my trades. I just kind of experimented with this, I experimented with that. I saw that worked and that didn't work. But I could have made much faster progress and had a much deeper understanding of my trades had I had some kind of trading tracker. Now, to give myself the benefit of the doubt, I will say that finding a good trading tracking platform, at least one that I can vibe with, that I can relate with, was very difficult. I will say that it wasn't for a lack of trying. Maybe in the beginning I didn't really try so hard, but after a while, after I really started getting serious with options trading, I did start searching for a tracking platform. I thought, there's got to be a lot of them out there to choose from, and there are a lot of them out there, but finding a good one is very difficult. I've tried complicated spreadsheets that were way too time consuming. I tried simpler spreadsheets that had incorrect formulas that weren't calculating my profits or losses properly. I've tried online platforms like TraderSync that just didn't really do what I needed it to do, especially for the amount of money I was paying for them. And then I finally came across TraderSync, and it is the absolute best. One of the things that I like about it the most is that you can synchronize it with your account on your trading platform and just pull your trades. So every time I close a trade, sometimes I have multiple trades closed at once, or every time I open a trade, I just pull it in, and then all I do is assign the proper tags to it, and boom, my tracking is done. From there, all I have to do is generate my reports through selecting the right tags, and you'll see me doing that in this video. So you'll see how smooth and easy it is to do an analysis of your trades. And so if you're getting into options trading and you don't have a tracking platform, I highly recommend TraderSync. I do have a link in the description below. It is an affiliate link, and I will get a little bit of money for it. So I would appreciate it if you could use that link to help support the channel. But I do want to say I'm not pushing this platform to make money from it. I'm pushing this platform because I highly believe in it, and I highly believe that it will help you in your results, long-term results in your trading journey. So with that said, let's go ahead and get into this week's analysis. What I have on the screen right now is my trading results from week 1 through week 15, not including this week, which is week 16. And as you can see, I have a total profit of $50,083.99. That gives me a weekly average profit of $3,339. And if you've been watching the channel for a while, that's below my target, and that's below what I've been averaging. My average has been over 5,000 up until the last couple of weeks. The last couple of weeks have been difficult. And let's go ahead and I'll show you. Let me get into the reports here. This shows you the weekly progress over time from this actually goes back to December 24th, which is when some of the trades were opened that were closed this year. But as you can see, it's been steadily growing. We did have a couple of losses here, and then the last couple of weeks we've seen a pretty big drop off. Let me go ahead and go into the weeks closed so that we can see each one of those week by week. We can see the exact amount. We have it both in a chart format and in a table format down here. But we can see week 1 through week 15. The largest profit that I've taken so far was week 5, where I took a profit of $10,751. I took some losses here, and this is when the whole debacle with Trump's trade plan basically blew up the market. And week 14, I took a loss of $4,800. And then last week was my biggest loss, where I took a loss of $18,742. So if you were, so this loss here was actually almost twice as big as my biggest win. And if you take a look at the last 2 weeks, we're looking at a loss of about $22,000 total. So it's pretty big. And that just really illustrates the importance of risk mitigation. It is so important that we keep a certain amount of buying power. Once you get into options trading and you can see that you can make consistent profits week after week after week after week, it is so tempting to use more buying power than what you really should be using, because obviously the more buying power you use, the more profits you can make. But where that will kill you and totally wipe out all of your profits is when we run into a black swan event, which is what I think we're considering it to be here with the Trump tariff plan and what it did to the markets. Fortunately, even though I did suffer some pretty significant losses, which is to be expected, which is what pretty much every options trader is dealing with. Fortunately, I had a risk mitigation plan in place where I wasn't using too much buying power and it didn't totally wipe me out. Yes, it did take me down, and yes, you did see from the chart where it did drop, but I'm still in the game and I'm still trading. And so let's go ahead and take a look at this week to see, did I continue to have losses or did I get back in the green? Well, let's go ahead and get into this week's trades and we'll find out. All right, so now I've got the tag selected for week 16. So now we are only looking at trades that were closed out for week 16. And the first strategy that we're going to take a look at, I've got the tag selected for poor man's covered call. So these are all of the poor man's covered calls that I closed out for week 16. And you can see here that I made a total profit of $105.18 off of these trades. If you've been watching my videos, you know that I have been doing poor man's covered calls on Palantir. Well, unfortunately, I had to sell the leap in order to free up buying power on Palantir. I did make an $1,800 profit on that, and that did help me free up some buying power. But now I lose the opportunity to sell calls against that leap. But I do still have the leap in NVIDIA. It's a leap with an $80 strike price. And just to give you an idea what that trade looks like, I'll go ahead and jump into this particular trade here, which was a $111 strike price call that I sold against those 80 strike price calls, leap calls. And so let me just open the chart here to show you what it looks like. All right, so now I have the stock chart pulled up, and what we're looking at here is NVIDIA. The purple line down here is the leap. A leap is an options contract that's long-term, typically about a year or more out. And this is where we actually buy an option. And I know that I typically preach that we don't buy options, we sell options in order to take advantage of the premium and the time decay. But where a leap can be beneficial is that you can control a stock that you think is going to go up over the next year or so for much less capital than what it would take if you were to buy the stock outright. And so way back, a while back, I bought this this option, this call in NVIDIA at an $80 strike price. And so because I have this call, I can sell calls against that call. And so that's what I did here. I sold this 111 strike price call. Let's see, I sold it on April 25th for 77 cents. I then was able to buy it back for 38 cents on April 25th, so it was the same day. And that helped me generate not a lot of money, it's only 38 bucks, but it's money nonetheless. I'll take a profit when I can get a profit. So that's what a poor man's covered call looks like. All right, so the next strategy that I'm going to get into here is the weekly wheel. If you want to learn more about the weekly wheel and how I trade that strategy, I do have a video on the channel called How to Print Money Using the Wheel of Fortune Strategy. I highly recommend you check that out if you want more information about how I trade this weekly wheel. But let me go ahead and change the setup here. I'll select the weekly wheel and deselect the poor man's covered call, and that will bring up all of my weekly wheel trades. And here you can see I made a total of $2,095 using the weekly wheel this week. And you can also see that they were all in Amazon. If you've been watching my weekly update videos, you know that I trade the weekly wheel in Google, Palantir, and Amazon. The reason why you don't see any trades closed out here in either Palantir or Google is because the stock price has gone pretty far below the level that I'm trading. And so in order for me to make any kind of premium on the calls that I'm selling against the stock that I own, I have to go further out in time to generate more premium, which means I have to wait longer for those trades to close out. So Google has dropped in price, forcing me to sell calls that are further out in time so that I can collect enough premium to make it worth my time. And I basically had to do the same thing in Palantir. And with the Palantir call, it's now going, it's basically toggling between going in the money and out of the money. And of course, when an option is in the money, it's going to show a loss until it either goes out of the money or until the stock gets assigned, or until the stock gets called away at expiration. So this is an example of what I've decided to do is I've decided to lower my profit target from 50% to 30%. You know, we can't really get too greedy. We have to monitor the market, see what the market's doing, and react accordingly. And with what the market has been doing recently, I am lowering my profit targets in some cases. And so hopefully I'll be able to take a profit on that by the time expiration rolls around, which is May 9th. But if not, then I will consider rolling at that point. All right, so anyway, let's take a look at one of these trades to give you an example of what the weekly wheel looks like. We'll go ahead and hop on into this Amazon trade where we made $467. And let me open up the chart here and we'll get it positioned so that you can see what's going on. So the blue line is where I own stock, and you can see the purchase price was $202.50. And so the way the weekly wheel works is that you sell puts on a stock that you don't mind owning. Amazon is one of those stocks that I don't mind owning. And if that put stays out of the money, you get to keep the premium that you collected. If the put goes in the money, then you're going to be assigned the stock. And I was assigned the stock at 202.50. But you can see here I have the cost basis of 191.67. And that is the difference between the purchase price of the stock and the premium that I've been collecting over this time frame that I've been trading this strategy on this particular stock. And so I have to track this cost basis because when I sell calls in order to continue collecting premium on this position, I have to make sure that I sell the call above the cost basis of the shares that I own. Because if I sell a call below my cost basis and then the stock rallies above the strike price of that call, I will then be forced to sell the stock at a price that is below my cost basis, which will basically lock me into a loss. So as long as I am selling calls that are above my cost basis, then I don't have to worry about that. And as you can see here, this call has a strike price of 192.50. I opened that position, I sold that call for 80 cents on April 25th, and then on April 25th, the same day, I was able to buy it back for 40 cents, which gave me, as I said, a profit of $466.83. Now, before we get away from this one, I did want to explain a couple of scenarios so that you can see what could potentially happen with this strategy. So the first scenario that I wanted to explain is what would happen if the stock, which is currently trading at 174.50 approximately, if this stock rallied up to 192.50 prior to expiration. Well, what would happen is if it closed above 192.50, I would then have to sell my stock at 192.50. And because I sold it, or because I bought it at 202.50, I would actually show a pretty sizable loss on that one particular position, the stock. I would show a loss on the stock that I bought and sold. However, if you combine that with all of the premium that I collected on all of these puts and calls that I've been selling, that would overall, on that combined strategy with all of those trades put together, it would show a profit. Now, I do have another option. If I decided that I did not want to get those shares called away from me, I could roll this call out further in time in hopes that the stock would then decline again, enabling me to close out that position for a profit. But here is the optimal scenario. What I would really hope for, and we can hope all we want, but what we have to do is react to what the stock actually does. But an optimal scenario is if the stock were to rally, let's say, somewhere just below the 192.50 prior to expiration. At that point, I would be able to collect my profit, and then I'd be able to sell another call that's a little further up. And then hopefully the stock would rally up just below the strike price of that call, which would enable me to close out that position for a profit. And then I could sell another call a little bit further up. And so the optimal scenario is that we could keep inching up over time, allowing me to take profits as we inch up. And then I would be able to sell a call above the purchase price of the stock, in which case I would not have to show a loss at all. I would be able to show a pretty significant profit on the whole, or the big picture view for this trading strategy. But again, that's the optimal scenario. Will it play out like that? It could. Hopefully it does. But if it doesn't, I have to react with reality and with how the stock actually moves. All right, so that's it for the weekly wheel. Let's go ahead and go back out to the dashboard. And again, we made a total profit of $2,095 on a weekly wheel. And so there's one more strategy that I want to cover with you with this week, and that is the covered call. And I do have a very interesting scenario or trade to show you on that one. That's where I held on to a position for over 5 months. So let's go ahead and pull that up. The covered call is right here. So covered call, yep, this is the covered call. We made a total of $2,984.58 on the covered call. We had 2 Google trades, and one of them was a loss. And the only reason I took this loss is because I made a mistake when I went to enter the trade. What it was is I sold this 180 call, and then I went in to put my good to cancel order to close it at a 50% profit, but I didn't have the 50%, and I was just too quick, too trigger happy, and I went up and I ended up closing it at the market, which gave me a small loss of $13 or $26 with commissions and fees. But so does that one count? I mean, I guess it does. It's money that I lost, so it's included in these results. But it was just a silly little mistake. That just goes to show you got to be careful. Make sure you verify everything before entering your trades or executing your trades. So I had 1 winner in Google, and then I had 2 winners in Tesla. And so the one that I want to show you is this one here, where as you can see here, I've held this for 5 months. There was a point in which I had a huge loss on this position, but I was able to basically nurture it over time, and I kept rolling it. And I ended up making $421 after commissions and fees, $422 if you round up. And let's go ahead and jump into the chart here just so you can see from a big picture view what this looked like. All right, so I have the stock chart pulled up for this one, and I know it looks kind of busy here, but bear with me. I'll explain what's going on here. So I've owned Tesla stock. I've been trading Tesla stock for quite some time. And I have been selling covered calls against Tesla stock. And as you can see back here, this was, let's get the date to pull up. This was November 8th of 2024. So this is how long this trade has been going on. And I sold here, you can see that I sold this. Let me get the, so this was a 240 call that I sold. When the stock was, it looks like it was around 215, I sold this 240 call. Yeah, all's fine and dandy. But then, bam, the stock jumps up here, and of course I'm showing a pretty big loss on this call. So I can take the loss, or I can roll it out, hoping that the stock will come back down. And so what I did here is I rolled the call, which means I bought back the 240 call at $28.08, and I sold the 250 call. And I also, so I rolled it, not only did I roll it up, I also rolled it out in time. So I wanted to collect a little extra premium for doing this. So I wanted to move the strike price out so that gave me a little more breathing room, and also wanted to collect some premium. So in order to do that, I had to move my strike price out. And if you see these lines here, of course, these represent the option trade, and the arrow here represents when it expired. So you see here I had to go pretty far out in time, which I don't like to do because I want to close these trades out, get my capital back, and take a profit at the same time. You can see that the expiration or the time frame of holding the option was way longer than this one here, but I was in a position where I had to do it if I wanted to collect more premium. And it was working out for me for a while, as you can see the stock was going down, but I was never able to close it out. So unfortunately the stock rallied again, and it rallied really hard here. You can see the distance between my option and the stock price, and of course these are calls, so we want the stock price to be below the calls. I'm way in the money here, and the stock sells off again. I'm hoping that it will come back down so that I can close out this position, but no, it basically bounces sideways for a while. So at this point, on November 29th, I decide to buy back that call for $88.90, and I sell another call. Let's see, this was a December 20th expiration. This was a January 17th expiration. These were both 250 calls. I wasn't able to move it up anymore. I just wasn't able to do that for a credit. So I just moved it out in time. I went from December to January, and I was able to collect a little extra premium for that. But the stock still doesn't cooperate. It still goes above, it still rallies. And as you can see, it's way, way, way above my strike price for the call at this point. So I am showing a huge loss here. But I stay in the game. I decide that I'm going to buy back this call for $228.30, which was a $250 call. And then I am able to move it up to the $250 strike price. Let's see, I sold this one. Actually, I bought this one for $228.30, and I sold this one for $225.85. So I did make a little premium by rolling out at this point. And again, the stock sells off, it rallies, it sells off, it rallies, it does what stocks do, they bounce back and forth. And so we fast forward out to January 30th, which is where I decide to do another roll. I buy back the 255 and I sell at 255, but I go out in time again. Now I'm out to the March 21st strike price. And on this one, I bought back the call for $144.48, and then I sold this call for $146.05. So again, I was able to collect a little more premium. And now the stock is actually doing what I needed to do. It's selling off. So it's going in the direction that I need to go. So I'm just patient. I'm staying in the game. I could have taken a loss, but I did not want to take a loss. It would take me a very long time to recoup that loss. So I'm just remaining patient and staying in the game. And I've been trading Tesla for a long time, so I know how it trades and I know how volatile it could be. So let's fast forward again to February 28th. I buy back the 255 put for $35.92. That had an expiration in March. And then I sell the 265 call. So again, I'm able to move my call up a little bit, and I'm able to sell that for $36.21. I do roll it out in time again with an expiration of April 17th. So we move forward a little bit further, and here is where I buy back the 265 call for $26.61, and then I sell the 280 call for $28.51, and so I'm able to collect a little extra premium, and I move it out to May 16th. And then finally, here's where I closed it out. This was this week on April 16th. I was able to buy this back for $7.80. So after all of that time, and after being, I mean, this is just huge. This is a huge loss right here. With the patience and with, the drawback of this is that I'm tying up this capital for all of this time, for 5 months. So this capital that I could have been in and out making profits on other positions is being tied up, and I'm not making any money. Yes, I'm collecting a little bit of premium along the way in hopes that I will be able to close it out for a profit, with no guarantee of that, of course. But it did work out in the long run. It did work out eventually to my benefit, and I was eventually able to make $421.91 after 5 months of being in that position. But hey, a win is a win, and I will take it. And I feel good that I was able to have the knowledge and experience to be able to take that huge losing position and at the end of the day show a profit on it. All right, so again, let's go back to the dashboard. And again, we made just under $3,000 on the covered calls, and that is all of the trade strategies that I employed for the week. So let's go ahead and go back to see what my total, as you saw along the way here, I didn't take any major losses. So let's go ahead and see what our total profits were for the week. And to show that, all I have to do is deselect this strategy so that it will show all of my strategies for week 16. So I just click the X here, let it load up, and we can see here that with all of my strategies, I have a total profit of $1,185.09. You can see all of my setups over here, the covered call, the poor man's covered call, and the weekly wheel. So back in the green for week 16. It feels good to have a profitable week. A lot of pressure and stress has been taken off, and I'm very, very happy and relieved about that. And so now if I want to see where I stand for the year to date, what my total profit is year to date, all I have to do is come up to my custom tags. I can select my week closed button here, which will select all of the weeks. I can deselect 2024 because I don't want that, and I don't need these merged, this merged tag. So once that loads up, we can see that we are at a total profit of $55,269.08. And if we take that number and divide it by 16 to get our average weekly profit, we are now sitting at $3,454. So we did bring it up a little bit, still below the $5,000 target. But hey, it's a positive number, and that's where we need to be grateful that we're still generating weekly profits week after week for the year to date so far. So let's go ahead and take a look at our reports to see what our weekly graph looks like. Well, we'll first take a look at our annual graph here. And we can see that we had that drop off, but it's gone up a little bit here in the last week. And then let's take a look at our weekly results here. Our weekly chart, our bar chart for the weekly results. And so, yeah, we can see we're back in the green here, so that's good to see. Let's just hope that this is the worst of the worst here. Again, it's a lot of people are considering this a black swan event, and I think it is too. The unfortunate thing is that we haven't come to any resolution with the whole cause for this black swan event, and that is the trade war. So that's still hanging out there. We have to be cautious, and I'm going to tread cautiously as long as that is still an issue. I have to be very careful. I'm going to take smaller profits. I'm not going to be able to generate as much profit as I have been as long as this is an issue. So until this gets resolved, I'm going to have to take smaller profits, and it is what it is. We can try to take bigger profits, but if we push too hard, we're just taking on too much risk, and I'm not comfortable doing that. I'm not going to do that. That's where a lot of traders get their accounts blown up, and I just don't want to be in that position. So there's a few things, there's also a few factors right now. I am sitting with a much smaller amount of available buying power. Typically, I want my buying power to be about 50% of my overall portfolio value or my net lick, and I'm not anywhere close to that right now. And so the only thing I can do is there's a couple of things I can do to free up more buying power. One is, one thing that I have no control over is volatility decreasing. I do have a couple of positions open in the ES right now, which, because volatility is higher than average, higher than what it's been, higher than what it was when I opened these trades, that's sucking up some of my buying power. So hopefully, if we don't get any more crazy news, then the volatility will come down, and that will free up some more buying power for me. And then the other thing is, I do own some stocks that I bought either through for long-term stock holding, where I'm selling covered calls against them, or through the weekly wheel. And those are now below the purchase price where I bought them, so I am showing a paper loss on those. And hopefully, again, if the markets can recover gradually over the next, next month, 2 months, 3 months, then that will build up more buying power for me. So, there's only so much control I have over this. I just have to hope that, there's no more major crazy announcements that's going to cause the markets to go haywire, go crazy. And all I can do is just take it one day at a time. There is another thing I can do. I can close out those stocks at a loss and show a loss and take a loss on those stocks, which will open up more buying power for me. But, I just don't want to do that right now. I'm going to give it time. I'm going to be hopeful, and I'm going to be optimistic that things will settle out and certain people will come to their senses. But That's the decision I'm making, and it's a calculated decision, and hopefully it pays off. All right, so that's it for week 16. Back in the green. I'm very happy about that, and I appreciate you stopping by and checking out my journey. If you have any questions or comments, please write them in the comments section below. I am really just getting started on this channel. I have a lot more content. I have some more step-by-step guides. Haven't been able to produce too many of those here lately just because I have been busy with other things, but I am going to get back to that. I want to do a demonstration video on how I use TraderSync, how I have that set up. I also want to do another step-by-step on the leaps and the poor man's covered calls, because I think that's a wonderful strategy. But until then, I just want to thank you again for stopping by. Make sure you like and subscribe to the channel. And until next time, wish you a great day. All right, happy Easter. Bye-bye.